Is passive income in cryptocurrency a real thing? Is it achievable? What's up, guys? In today's video, I'm gonna explore the passive investment landscape of cryptocurrency. Is it a scam? Is it possible? And what are my options? If it's your first time to the channel, what's up? My name is Garabedian, AKA the Phenom Investor. Like, subscribe, and share this content with people that you feel could get some value out of this, because I think cryptocurrency is one of the most important things we could get right in our lifetime inside the financial industry. We are truly sitting on the next gold rush, and I believe when the next bull run happens, it's gonna be the biggest and most epic ever. So without further delay or ado, roll that clip. What are the options when we're looking for a truly passive vehicle inside crypto, right? So one of the ways that you can earn passive income is by being a liquidity provider inside of a liquidity pool. Now, the challenge with liquidity providing is you have to have a higher level of expertise, because there is some risk in liquidity providing by the factor of impermanent loss. I'm not going to get into detail about how impermanent loss can affect you, but it's essentially when a token that you're pairing with goes down in value, you could potentially lose everything that you have inside of that liquidity providing function. And so there is more degrees of risk inside liquidity providing. So I would suggest that you have a very firm understanding of how that works before you actually put up your money into a liquidity pool. The second thing is a miner. As a miner, you're basically buying equipment, connecting it to obviously a source to run that computer and the electrical cost continually in order to mine rewards from the blockchain, and you're paid obviously crypto in exchange. I don't know if that's necessarily very passive, because you're gonna have to continually monitor that equipment, making sure that it doesn't overheat, making sure that it stays up to date as far as the software is concerned. And I've also heard that buying mining equipment does become costly and almost ineffective, because the mining rigs become outdated fast. So that's another thing that you have to consider when mining your own cryptocurrency. Also, the high electric and fees that come along with that high utility bill every single month may negate any gains that you make. So these are, again, certain things that you have to consider if mining cryptocurrency would be a route that you wanted to take. So a third option would be staking your crypto. And I think that is a fairly safe solution. However, if you're chasing the crazy APYs that are claiming that they're gonna pay you 10,000% APY, that truly is a Ponzi. So those have never worked out since they've been released. I can see why, because it's not sustainable. There's no way that you can sustain that type of return. I was in some projects that essentially failed with these high percentage APY promises, and it was over and done with within weeks, if not a month or two. So I learned my lesson there. I believe we all have to kind of get burnt in some cases to learn our lessons, because everything looks great from the outset, and we want to have the attitude of positive thinking and thinking that these things are going to work out. But unfortunately, the old adage is true. If it's too good to be true, it usually is. I have been staking Hex as an example, and if you watch this channel and follow me, you know I'm a big proponent of Hex. Obviously, it's going in a bear market trend. It's down 90% from its all-time highs. However, because I am staked and earning passive income through more Hex, it's actually helped me not sell during this downturn and helped me stay in the passive investment vehicle, which is the Hex staking mechanism and smart contract, because I'm earning daily Hex through my T-share allocations. And it's allowing me to stay patient through this downturn, because I have long-term conviction in the project. I'm not selling it at loss, because I'm just continuing to build rewards through the staking mechanism inside of Hex. You could also look at staking your Ethereum or your Cardano or any other cryptocurrencies that offer a yield and a yearly APY. So you can find these type of opportunities by just simply looking at your particular holdings and seeing if there's staking rewards offered within each of those cryptocurrencies. Now, the option that I want to talk to you about is actually node investing. So let's start with exactly what a node is. And a node, guys, is basically, it's a computer connected to other computers which follow rules and share information. And this function is critical in keeping the structure of the blockchain intact, and nodes are essential for keeping cryptocurrency networks running. So it is basically required inside crypto, and that's one of the reasons why I like it, because it's not like a shiny object. It's not built in terms of some type of Ponzi where it's not producing any type of real world value or utility. A node is essential in keeping up the blockchain and making it run. So I consider it like maybe the plumbing of the infrastructure. When you build a house, you have to have core components, electrical and plumbing being two of them. So I consider a node a core component of the blockchain. It's required and necessary in order for the infrastructure to keep running and operating at its best and highest use. So let me switch over to my computer and I'll show you guys in detail the project that I am investing in. Okay, so we're here at the computer now and I'll walk you through this investment and how it looks on paper and what I feel the potential is of it. So in a node, the essential opportunity is you're going to be earning rewards. And so the underlying asset in this opportunity is Pocket. So Pocket, again, is a token that I feel will make it through the bear run here, this bear cycle. And it's not something that's kind of built on smoke and mirrors. As you can see here, Pocket's whole mission statement and design and concept is a Web3 infrastructure. They have a very successful clientele base here. You can see most all of the layer 1 developments: Ethereum, Harmony, Solana, Avalanche, Binance, Polygon, Pocket, Algorand, Phantom, Moonbeam, Moonriver. I mean, it goes on and on. And essentially what Pocket's utility is, it allows these blockchains to communicate data across all of the different chains seamlessly and successfully. It currently in the last week is operating 47,000 plus active nodes. It's doing 6 billion relays weekly, and it's on over 40 plus networks. It's not something that is promised or the team is working on. This is an actual product being used today by all of these successful cryptocurrencies and blockchains. So that again goes back to the entire thesis and philosophy of crypto. What's the utility? Is it going to be here in the future? What's the opportunity? And does it provide something of real use case? And can it grow? But you've got to also look at, there is some potential risk. And I'm looking at through all of these different lenses, and it checks the box for me. And what's great about it is right now, with where we're sitting in the market, I'm getting into this project at its all-time low. Again, I've said it before, you make your money in the buy. And right now, I think the entry price at essentially 14 cents is a no-brainer. If you look at where Pocket was in early January, it actually hit its all-time high on January 16th at $3.10. So it's down almost 96% from its all-time high. It's absolutely taking a brutal beating. There's no question about that. But if I'm gonna get into a project, I'd rather buy it when it's at its pretty close to its all-time low, which was 12 cents. So we're only 2 cents above its all-time low. I think it's found support at 12 cents. So I'm comfortable going in. What does it take to actually run a node? And I don't know, I'm not the expert. So that's why I'm looking at this passive vehicle, because I'm gonna put it into the hands of experts to run this node successfully for me. And therefore, I'm just going to make the investment, look at all of the potential SWOT, if you will, strength, weaknesses, opportunities, and threats, and analyze those things. And if I feel good about it, then I'll move forward. I always look at the worst case scenario. So what's worst case scenario, guys, in cryptocurrency? It could go to zero. That's the worst case scenario. And the question is, are you cool with the worst case scenario? And if you're cool with it, then make the investment. And also, don't put in what you need tomorrow or even the next 2 to 3 years. Okay, moving forward, like I said, I don't know how a node works. I'm not a technical guy, I'm not an engineer, I'm just an investor. So I look at numbers, and numbers dictate to me if it's gonna be potentially a good investment or not. Again, I don't have a crystal ball. I can't tell you where Pocket is going in the future. I can only look at historical data and what I feel the potential is based on how I explained. The utility, the team, what it's currently doing today and not built on future promises. So those things check the box. It has utility, it's running today, it's providing a real use case. It already has a history of performance. So I'm analyzing those things. Now, the Pocket network actually has to have real code in to be able to run its node. So it needs a programmer, a developer to actually write physical code in order for it to work. I was in some of those, crazy node investing that were just all web-based. You didn't need any type of software or code. It was just point your mouse, click, put your crypto in, and earn rewards. This is totally different. It's nothing like that. You can't go to a website and click a few buttons and start processing your node. Those projects are no longer working and they all pretty much went to zero. And so therefore we learned our lesson, and now I'm looking at real opportunities with real engineers, real teams, and that's what Pocket is. And so this is, like I said, a true passive vehicle because I'm not gonna have to write the code. I'm not gonna have to learn anything. I'm gonna pass it on to the team. They're gonna manage it. And so I'll walk you through how that looks. So I'll open up the spreadsheet here to give you an idea of really what it's looking like. So with today's Pocket price of being 14 cents, I mentioned to you that it takes 10,000 Pocket to create one node. So at today's prices, if I wanted to get 6 nodes, okay, because I think right now the entry price is really good. So at 14 cents, I need to buy 10,000 for one node. So that's $1,400 per node, and I want 6 nodes. So my total investment to get 6 nodes is $8,400, okay? $8,400 would essentially give me 6 nodes that I can let do its thing. And based on the projections, again, these are all projections, the estimated nodes, the estimated Pockets that I would get per month with 6 nodes is 9,125 tokens per month. Annually, you're looking at just under 110,000 Pocket. And I have a maintenance cost, guys, because again, if you want something passive, if you're not gonna manage it, if you're not gonna make sure everything's working properly, if you're not gonna write the code in order for it to produce that Pocket, you've got to have someone do it. And last time I checked, no one works for free, guys. So I've agreed to pay the team $170 per month per node. Okay, so for each node that I buy, it's $170 per month. I said I'm buying 6 nodes, so I have to pay $1,020 per month to the operating team in order for it to continue on without my involvement. So based on all of this data, I can expect to bring in a gross yearly return of $15,330 based on 14 cents per Pocket. After I pay all of these fees, like I mentioned, I've got the monthly node cost of $1,020. That's gonna eat up most of my profit in year 1, assuming Pocket stays at 14 cents. If it goes below, I'm gonna maybe break even or lose money. That's the risk we have to take. But again, I'm looking at it from worst case scenario. Am I okay with worst case scenario? Yes, let's proceed. Now I'm giving you worst case scenario, right? At worst case is 0. At today's scenario, 14 cents, and all of these numbers working out, I would net profit $3,090 annually. So at that rate, it would take me somewhere around a little less than 3 years to get my money back, assuming everything stays the same. Now, as I mentioned earlier in the video, Pocket reached an all-time high of just over $3 in early January. So we could see here, all-time high, $3.10, January 16, 2020. So you can see also that at one point, if you wanted to buy a node in say March or even April, you'd have to spend a pretty penny to buy a Pocket node. In March 20th, for example, one Pocket was 84 cents. So again, having to have 10,000 Pocket per node, that's $8,400 for one node. And if I wanted 6, now my investment goes to $50,000 in order to buy 6 nodes. Again, timing's everything. What's your entry price? What's your exposure? What's the upside? All of this checks out for me. So that's why I decided to go in and buy 6 nodes at a fraction of what I believe the future value will be. Now, so let's look at future value. I'm not gonna sit here and say it's gonna return to its all-time high in the next 6 months and surpass it. No, I think it has the potential to do that, but probably not for 2 years. So let's be conservative. Let's look at $1.50 per Pocket in price. So let's see how the numbers shake out now on a $1.50 Pocket. The same numbers are here in terms of how many nodes, 6 I have. Again, how many the estimated annual Pocket I will receive. Again, just under 110,000, but based on the appreciation of Pocket to $1.50, my monthly cost stays the same no matter what, so that's good, that's locked in. Now I'm grossing $164,000 a year, and now my net is $152,000 a year. So that's where it kind of starts getting exciting, guys, don't you agree? I made essentially a $9,000 investment to potentially get $152,000 a year. So now I'm looking at an income monthly of just under or just over $12,600. Guys, that's an amazing return. Again, it's speculative because the Pocket has to perform, but I'm looking at 50% of its all-time value. This is the power, guys, of cryptocurrency. This is the opportunity, because these opportunities will probably cease to exist in the next bull market because prices are up and this stuff starts to become less affordable for the average person. So again, guys, time is, relative in this case because time changes the thesis, time changes the opportunity, time changes the cost of money out of the pocket to, no pun intended, to get this type of return. So guys, this is the investment that I wanted to talk to you about. Again, passive income is a potentially real opportunity in crypto. I think it's only going to get stronger as more of these opportunities develop. So guys, if you like this video, if it brought value to you, please like it, please subscribe, and shoot me a comment. Let me know what you guys think. Is it too risky? Do you like the investment? I just would like to know your thoughts. Let's engage more and let's have more conversation and build this community. I love to educate you further. As a reminder, click the link below if you want to get inside my group. My group has real firsthand knowledge and access to these opportunities before it ever shows up online or YouTube. We're dropping a lot of value inside there where you're talking directly with me and people on my team and other 7-figure plus crypto investors that are really doing some major things. So check out the Phenom Crypto and NFT group, link in the comments and link in the description of the video. All right, guys, I appreciate it. As always, be phenomenal. We'll catch you on the next video. Peace.